All right, thank you very much, Nakundi. Now, moving forward, players in the MFI space have expressed concerns over growing volatility within the credit market in the country, noting that customers may continue to experience high interest rates as cost of credit they onboard onto customers continues to grow. At the same time, they have lauded the government effort through the Hustler Fund, which they say has helped elevate and increase MSMEs seeking more credit from them. I spoke to Incredo chairperson Alphonce Muriu to understand how the credit market has changed and how MFIs are adapting to these changes.
One of the challenges that most of our SMEs have is access to capital. One of the challenges, I would say, which hits that so much is their bankability. And the bankability, it's not that they cannot be bankable, but how do they present themselves to the finance institutions? Finance institutions would like to assess the cash flows, they would like to assess, quite a number of things. And I know a businessman or businesswoman will just wish to explain in terms of maybe how much they're getting every day and all that. But when the banks would like to look at maybe the issues of the cash flow, how they come in and out, the margins and all that, that becomes a bit of a problem. Yeah. So it's one of the areas that I would say that we've been having a problem, but the need, the opportunity, it's so great. I don't think even with the established financial institutions we have in this country, we are able to even to meet 40% of the credit needs. Not.
All right. And of course, one thing that has totally changed the credit landscape is the launch of the government-backed Hustler Fund. Yeah. And I just want to understand for you, as someone who has been in this space for some time, how has that then changed that landscape?
Well, I would say that there has been a bit of a change, not so much, because the market segment and the targets are different. If we look at Tier 1 banks, Tier 2, Tier 3, and when the microfinance, deposit taking and non-deposit taking, they're all different market segments. Yeah. And even where the Hustler Fund came, they're also different market segments. And this one you can tell easily because of the, if you look at the bandwidth of what the Hustler Fund is giving, probably from about 500 to 1,000, 10,000 and all that, that is principally not our target segment. Our target segment is much more, higher than that. So I would say really not much change, but I would say Hustler Fund actually is assisting in terms of graduating those SMEs to also be clients of, organizations like Incredo.
When you look at the volatility within the credit market, particularly in as far as interests are concerned, how then does that affect the business? And for you as a player in the market, what have your interests been, and how have you had to adapt?
Yeah, it's an interesting question and quite broad, because interest is a factor of so many things. Because each and every institution has got its own business model. And this model is informed by, what is your cost of funds, for example? Secondly is, what is your target market segment? What are the risks? Yeah, and at the same time, the model of the institution has got its own cost structure. How do they generate, the leads? How do they turn the leads? How long do they take? And all these things. So you find that there's a bit of, I would say, difference between one institution to the other, especially the one non-regulated. But one of the things that actually drives that is actually the cost of funds that you have been able to access. Majority of us who are out in deposit taking, who have to get maybe commercial fund to lend, our costs are really high. Secondly, our target segment market, the underserved SMEs, the Juakalis and all that, we are also exposed to a very high risk. So we have to have a margin to be able to compensate that just in case. And it's a reality, because if I can tell you, for the last about 3 years, even when COVID came and all that, as much as the first Tier 1, 2 banks are really making high profits, there was also quite a hit in terms of, the MFIs that are below that, because of some of the businesses that were closed. So I would say interest on loans will be different from one institution to the other, but because of competition, definitely, we have to maintain within a particular, limits. Yes. We cannot go too high, because then we don't have customers.
The issue of NPLs, whether it's Tier 1 banks, whether we're talking about SACCOs, this is something that cuts across. So for you, how then are you able to deal with this?
Non-performing loans is a reality, and I think the discussion that has been there since COVID time, you remember even the suspension of the credit rating. Yeah. The non-performing loans has really increased. But I would say after COVID, we have been able to manage. One of the things that is very, very crucial in terms of performing non-performing loans is, first of all, is understanding the customer relationship. Some people don't just pay because they can't pay. Some people are unable to pay because the business is not working. So there has to be a bit of an analysis by the institution themselves to know where probably there is just a deliberate move and where there is a problem of a person not paying. In that where there is maybe the business not going very well, the relationship is very important. That's why you can also restructure the loans. You can restructure in the sense that maybe you can extend the time. Of course, if you do that, it has also got a cost element in it. Yes. So some of the loans, sometimes you want to also go a little bit deeper to really understand what are the issues. But of course, it adds cost.
All right, and on that note, we're going to take a quick commercial break. When we come back, we'll be looking at how the latest fuel prices have impacted your fares, and then later on we'll be having a conversation around asset management. Stay tuned for that.